So traders have really been focused on Gamestop and the other Reddit short squeezes. And the question is, could it lead to a stock market crash? I'll try to answer that as well as look at my normal market analysis. We'll look at the day trade of the week on CATB, and we'll do a market scan in search of opportunity, showing you how you can find the next hot stock. So for the last couple of months, and specifically for the last couple of weeks, we've seen a real focus on these short squeezes on things like GameStop, AMC, BlackBerry, Bed Bath & Beyond, etc. There's a handful of stocks that were heavily shorted by hedge funds, and a large group of retail investors decided to buy those stocks aggressively in order to enact a short squeeze where the short hedge funds had to buy back their positions, and that largely has worked. Those stocks have gone up a lot. We first picked up on GameStop back at the end of August when it was $6. Well, it hit almost $500 this past week. The question is, what's the ramifications of that? What I've noticed is that there is a considerable amount of trading volume that has been focused on these short squeeze stocks. In fact, I read a statistic that one of the days this week, over 7% of the market volume, total market volume, was in just a handful of these, call it Reddit rally stocks. And when all of that money flows to one small group of stocks, it means that that liquidity is taken away from somewhere else. And that means if there are people who want to exit positions in other stocks, the lessened liquidity means that there aren't as many buyers for those stocks, and they can therefore go down more than they might otherwise. The other issue is that there's a lot of leverage in the market. People are buying options on some of these stocks, and in some cases, they're still able to margin some of those positions. The problem is because those stocks are so volatile, we could see a lot of margin calls or people just sold out of their position because of the leverage. Now, normally I wouldn't be too much of a conspiracy theorist because that's not my style. But I did notice that last week we started to see some weakness in the overall market. And I think one thing that may be contributing to that are the large losses that hedge funds have had on these short sale trades, and the fact that they may have to liquidate some of their other positions in order to shore up some cash. And then, of course, you just have the risk of all of these retail traders jumping into these hot stocks in many ways irrational ways. And when that irrational bubble bursts, and it will burst, you will see some real financial damage to those who cannot find a buyer for their positions. So be careful. And as we go through the market analysis, we keep in mind that one of the things which is really anomalous that may drive future market weakness is these Reddit stocks, the Reddit rally stocks, GameStop, Bed Bath & Beyond, AMC. There's a short list of maybe a dozen of them. All right, let's get into this week's normal market analysis, starting us off with the U.S. markets. And there you can see on the 30-day, 60-minute chart of the SPY, the S&P 500, that upward trend was broken. Now, this pattern here is called a rising wedge. When the bottoms are rising faster than the tops, it means that buyer interest is starting to go away. And we had a break of that rising wedge on Wednesday. We then rallied on Thursday, but failed to make a new high, and now we have a falling top. And then we sold off late in the day on Thursday and followed through with weakness on Friday. And that sets up for perhaps it's just a round of profit taking. We've had considerable gains in some stocks, but perhaps it's something more ominous as liquidity is put into some of these Reddit stocks and it is taken away from others. So I do think there is some caution warranted given the short-term chart of the S&P. Now, I've been telling you for a long time, one of the things to watch for when looking for a market correction is a break of an upward trend line. And we had a break of the short-term upward trend line on the weekly chart of the SPY this past week. It is not from a falling top, so that's one thing in the bull's favor. And the longer-term upward trend line, the longer-term area of support, is still intact. And so at this point, it looks to me like we're just going to see a little bit of profit taking in the near term, but it could turn into something else. It could turn into more severe selling, and therefore I advise some caution. Now, what does that mean when I say advise some caution? If you look at the individual stocks that you own, I would not sell anything unless they start to break down through support, unless they, individual stocks, start to break upward trend lines from falling tops. And if that is the case, then you may want to be a little more aggressive on your exits, because this could turn into bigger weakness like we've had a few times in the last few years. Moving along to the NASDAQ, you can see there again a little bit of weakness, but this market has actually fared a little better. We've managed to hold the upward trend line, but it's right at it, and so we need to be careful. There is still the longer term upward trend line like that as well, and that's still okay. But there is some short-term selling pressure, and so short-term traders should be a little pessimistic. Longer-term traders should simply be a little bit cautious right now. The small cap sector has been one of the leading areas, and this is where that retail money has flowed, while perhaps the retail money is moving out of biotech and some of the legitimately strong stocks and moving into these Reddit short squeezes, and that's perhaps what's causing a little bit of weakness there. It doesn't really matter what the reason is. It really doesn't. What matters is whether the upward trend line gets broken, and we're sort of right at it right now. I'm not too worried because, again, this is coming from a high, not from a falling top. But a falling top could build in the weeks ahead, and that could lead to a more substantial sell-off. So again, I don't want anyone to think that the sky is falling, but I do think a little bit of caution is warranted. Canadian markets, well, there we see a lot more weakness on the TSX, and I've talked about this last week when we broke down through support from that falling top, and we have gathered downside momentum. It's getting a little bit oversold, so I'm not too worried about this, but we should look at that longer term chart and realize that we've got some short-term support right here. If that gets broken, then our next level of short-term support is either there or at the upward trend line, which we're kind of right at as well. Now, you'll remember about a month ago when the market rallied into this high, I said expect the market to get stuck here. And so this is an important lesson. Now we're seeing the proof of that. The market rallied into resistance, got stuck at resistance, and now it's starting to show some weakness. So one of those technical analysis rules that really has proven itself. Onto the TSX Venture, and you can see a break of the steep parabolic upward trend, and that to me means we're likely to pull back a little bit for a while here. So again, short-term weakness expected on the TSX Venture. Onto commodities, gold tried to break its downward trend line about a month ago, and it really failed. And so it's stuck. It's relatively stable, but it doesn't look particularly strong. And so I would not be too eager to buy gold stocks. Oil is sort of melting its way higher. It's not particularly strong upward move, but the bottoms are rising. Prices come a long way from the lows. And I think we're just going to slowly grind our way higher as the markets perhaps look toward a gradual recovery in the global economy and the demand for oil. And finally, the fear chart. We always keep an eye on this one. Remember last week I said there was no fear. Well, now we've got a little bit of a jump in fear, breaking this downward trend line. Now, we've had those jumps before. They don't necessarily last very long, but it's always a bit of a cautionary note. One thing that I do notice is that volume was very strong on the VXX this past week, stronger than it was in the previous pullbacks in the market and the rallies in the VXX. So again, another little clue there that maybe there's some concern that we'll see a more substantial sell-off. So my ratings then on US stocks, neutral on both time frames. That's a downgrade from last week. Canadian stocks, neutral long-term and bearish short-term. Gold, neutral long-term and bearish short-term. And oil, nothing changed there, neutral long-term and bullish short-term. Irrational trading in a small group of stocks could lead to a market pullback. There were early signs of weakness last week. Now, these sell signals are only short-term, so the swing traders should pay attention to them. the day traders should pay attention to them, but the longer term traders should simply have some caution with stocks because of that early sign of weakness. Gold is relatively quiet, oil is quietly moving higher, and fear, as I said, rose a little bit last week. All right, now we're going to go on to the day trade of the week, and this week I'm going to focus on CATB, which was a stock on Friday that was very liquid and very volatile, and it presents a couple of rules that I like to use when I am day trading, and these are things that you should keep in mind as well. So let's jump into the chart of CATB. Before we do the economics, I want to highlight these things. First point is that the buy signal was at the open. You can see the little pink dot there. That is our action candle, and so every day in Active Live, we find all of the action candles that trigger on US stocks. But I don't like to buy gaps up like that. That was a pretty substantial gap to the upside. And so when that happens, what we look for is a second signal. Inevitably, these big gappers often pull back, and you can see that it pulled back for a little while. And it wasn't until about half an hour later that it started to rally again, and it made another action candle there, breaking its pullback. And that's when the stock went into an upward trend. So rule number one is don't chase the big gaps, wait for a second signal. Now the second thing I want to drive home is something called a bursting bubble candle. A bursting bubble occurs when a trend goes up very steep, we hit a new high, and we close with a red candle. That red candle means that that 2-minute bar closed below its open. And typically you have very strong volume to accompany the bursting bubble, and it is a strong sell signal. So in this case, the exit was at 25 times its risk. That means for every $100 of risk, there was a $2,500 profit. In order to take $100 of risk on this trade required 760 shares or $2,759 in capital. Probably you couldn't margin this stock. I mean, it was over $3, so some brokers may have given you margin, but the volatility may have meant that margin wasn't available. So let's assume no margin. That's still a $2,500 gain on that $2,759 in capital. That's a 90% return on really less than a one-day hold. It was a hold for about an hour. All right, let's do the Stockscores trade of the week. And this week, I'm going to show you how you can use Stockscores to find hot stocks like CATB relatively early. And so this is not for longer term traders this week. It is more for those middle term swing traders. We can scan for abnormal activity and high liquidity and then look at those 30-minute charts on the Stockscores website, or perhaps using your real-time data feed from your broker to look for stocks that are breaking from low volatility, stocks that are surprising the market with action. I'll tell you that Gamestop did that back on August 31st. And BlackBerry and Bed Bath & Beyond and all of these stocks that are red hot right now, they all did it weeks or even months ago. And so I'll show you how you can find those so that those hot stocks of next week can be found early. We'll jump over to the Stockscores website. I've already logged in. First thing we need to do is set our default chart to a 30-minute chart. So we'll pull up Gamestop here, and I'm going to go down to the chart options and change it to a intraday chart, and we'll make it 30-minute candles. Type in 30. You can't see that I've typed it in there, but I did. I might have to fix that in a moment. And we'll do a 15-day chart. I then click on Create Chart. Let's see if it worked. I may have to. Yeah, it didn't work. So I'll just go back into the chart options, and now I can make this a 30-minute. You have to do it in 2 steps. So 30-minute candles, Create Chart. And now we have 30-minute candles. And now what happens is any other stock that I pull up will be with that same chart time frame, because I've essentially set the default chart to that 30-minute, 15-day chart. So now I go into Market Scan, and I'm going to build my own scan. Instead of using one of the presets, I'm going to do something very simple. Look for stocks that are trading abnormal volume and are on pace or did trade at least 50,000 times a day. That's 50,000 trades, not volume of 50,000. It's 50,000 trades a day. Now I run the scan, and it found 48 stocks that did this. Now, we're doing this on the weekend. This is something you should do about 45 minutes after the market opens. And again, you need to be a Stockscores member to do that. But this is how you find these kinds of stocks. Here you see McEwen Mining. It was boring. Nobody cared about it. And then on Thursday, it started to trade abnormally. Abnormal price, abnormal volume. That was at $1.05. It ran up to $1.45 the next morning. Now, it's still abnormal on Friday, but it's not really what I would want on Friday. It was Thursday was the day. And if you run this scan on Thursday, you will find it. Here's Top Ships. It also traded abnormally early in the day on Friday, abnormal volume. It actually started on the 25th of January when price started to move. So again, if you run this scan a few times a day, every day, you can find stocks like this. And that's really the process. There's CATB, which was our day trade of the week. Now what we want to do is look for stocks that are breaking from low volatility, breaking out from a good chart pattern. Vaxart did that. We traded Vaxart in active live on the 25th, but again, it came alive with a break from what's called a pennant pattern on Friday, moving from 10 and change to $13 in the course of a couple of hours. And this is the scan to find them. Now, of course, you can find them in real time if you are on Stockscores Active Live, and you can go to a Stockscores website and learn more about that. If you want to find them with the Market Scan tool, you need to be at least an investor member of Stockscores, and you can learn more about that in the trader training area of the Stockscores website. So there it is, a little market scan for my Stockscores members to try and find something new every day. And there are lots of hot stocks. Even though the market feels a little toppy, there's still hot stocks every day. We have a great market right now for trading. Hope that you've enjoyed this week's Market Minutes. If so, please click on the like button, subscribe to the channel. Make sure you turn your notifications bell on, then you'll get an email and an alert when I upload a new video. But most importantly, as you go into next week of trading, trade well.